Hello everyone and welcome back into the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the M1 Finance Roth IRA portfolio between the 18th to the 22nd of April 2022. We're going to be hitting 5 different areas. Number 1, the overall performance. Number 2, the weekly performance in comparison to the 3 main indexes. Number 3, the activity. What did we buy? What did we sell? What dividends came in? Last week we made $60 plus in dividends alone, which is awesome. And we reinvested it all. And number 4, what is the current portfolio's dividend income? So right now, our old portfolio, or our portfolio last week, was sitting at $43,827. We had 4 consecutive rows of green out there in the market, with last week being red. Let me know down in the comment section below right now, what is your guess for this week? Are we red? Are we green? Also, let me know, are you red or green this week? And then number 5, what exactly are we buying? I have a position in mind. I bet you guys can guess it. I've been buying it a lot lately. Just kind of averaging into that position. But otherwise, let's go ahead and get into the video. So jumping over into the M1 Finance portfolio, number 1, the overall performance. Well, we're at a whopping 69.69% return within this portfolio. So we have pulled back slightly, right? We were negative last week. We had what looks like another negative week this week. But overall, we're still up nearly 70% since inception in this portfolio. That was roughly 4 years ago. We have $8,356 of market gains and $3,202 of earned dividends. Now, these earned dividends will never go down. The dividends that this portfolio has generated are paid out in cash to me and then are reinvested back into multiple companies within the portfolio, which increase my share count, which increase my future dividend income, and that is going to perpetually be going on and on to the end of this portfolio, I suppose, or until it goes on to one of my kids. But either way, we can go ahead and start down below. What is our best performers here? We have Apple up 296%. Now I believe at a point it was over 300%, right? But it has pulled back in the recent times, so it's up 296, still amazing, right? Still amazing. Basically doubling, almost doubling our second position here, ABM, at 166. This one has skyrocketed recently. At one point, we had Main Street Capital in second or third place. Pfizer was up here in second and third place. So Pfizer's pulled back. I can kind of notice real quickly. Yeah, we had Pfizer up in second and third place recently. AbbVie was also second and third place. But there's been a big back and forth between Pfizer, Lockheed Martin, Main Street Capital, AbbVie, and now ABM Industries is kind of joining in. So it's really interesting to kind of see the competition, or just kind of how these percentage changes swing on a week-to-week, month-to-month basis, which is pretty cool. Heading towards the bottom, our worst positions down here are number 1, we have Clorox down. Now this is kind of showing 35.83 negative. That's incorrect. We were down around 27% at the lows. We're actually around 20 or so percent negative here in this position, despite this being negative 35%. And Clorox has been rebounding off their lows. So this is actually one I have been kind of eyeing, because, hey, now it's moving in a positive direction. It's no longer just losing consecutively. It's actually beginning to get money inflowing into it, beginning to rebound, which could be a potential time to kind of just average down as it's recovering. Because it's recovering in price, I'm already negative in it. And as it averages, or by adding cash into it, I just kind of average down my cost basis, kind of lower how much I've actually lost in that position, and then I kind of recoup some of my gains as it moves higher. Starbucks here down 18%, and IIPR. This one has flip-flopped. It was positive, not last week, because last week it went negative by 10%. This week looks like it went down another 4-some%, but it just within 2 weeks, this one went from being positive about 5%, 6% to being negative now. So that's how fast the market can kind of turn on these companies, which is completely normal. Now, jumping into number 2, the weekly performance. Now, how did you guys guess? Did you guys guess that we were green? Did you guys guess that we were red? Well, we are down 0.72%. We did earn some dividends, so we sat through an ex-dividend date. So some company out there in our portfolio was going ex-dividend last week, and we sat through it, and now in the future we're going to be paid roughly $18.12 from those dividends in the future. That's not that we're paid out now, but that we will be paid out in the future. Then we did take some market gains, market losses of $334. Now, how did we compare in comparison to the indexes, right? The S&P 500, on the other hand, was up very nicely here Monday. It looks like it's moving to the upside, right? We had a huge swing upside on Tuesday, early on in the morning, 1.6% gain, and then throughout the rest of the day, it actually kind of moved to the upside. Wednesday took a little bit of a beating there, and then Thursday, just a slow burnout here. I think what happened here on Wednesday is the Fed came out near in the afternoon saying that they're going to be raising rates a little bit more aggressive than normal, potentially moving from now 0.25% to 0.5%. I think a lot of this is already priced in, and then on Thursday, the market just reacted throughout the entire day, just burning off any sort of gains that it had made, or, anything kind of solid grounds that had been kind of holding off. It just kind of burned all of that off, being down a whopping 2.75% for the 5 days. That's pretty crazy. Year to date, it is down 10.37%. So basically, over the last quarter, right, 3 months here, let's look at the 3 months, it's down 2.87%. So it's kind of interesting to kind of see 3 months ago from today would be back in roughly almost the end of January, right? And this is showing down 10.37, whereas this is showing down 2.87. Dow Jones here for the week is down 1.86. Down year to date by 6.95. The NASDAQ here took the biggest hit this week, down 3.84%. Nearly 4% losses there. That's essentially from Netflix, I believe. They lost subscribers. They're cracking down on sharing accounts. They're going to lose even more subscribers after that. I think they lost some 30-40% just within a very short amount of time. I believe NASDAQ's in for a world of pain, as like other companies out there that aren't really profitable, that have been kind of just growth companies with no backing earnings, net income and such, are going to be in for a little bit of a pain here in the future. But NASDAQ is down 17.93% year to date. That's essentially 18%. Then we have the Russell 2000. I don't usually include this one or kind of measure my portfolio against this, because my portfolio is mostly high market cap dividend growth companies. So a lot of the companies that are within my portfolio are found mostly within the S&P 500, a few of them within the Dow Jones. So I usually like to compare my own dividend portfolio between the S&P and the Dow Jones. So as long as mine stays usually within the same performance or better performance, that is usually what I aim for with my portfolio. But I still like to include the Russell 2000 here. So this is some of the small mid-cap companies, down 3.21% here year to date, and down 13.57% year to date. So pretty good. We actually staved off a lot of the bruises this week, being down only 0.72%. Now, where did our gains and losses come from this week? Well, guess what? ABM, that one that's in second place, went up a whopping 8.6% this week. That really helped out the portfolio overall. Clorox, as we kind of discussed earlier, is on the bounce back here, up 3.5% this week alone. So while the rest of the market here was burning off that nearly 3% there, 2 to 3% there in the market, the Clorox company is up 3.5%, followed up behind by that REIT, Digital Realty Trust, up 3.27%, Cisco 2.93%, WP Carey, another REIT. So interesting, I see 3 REITs here at the top. Digital Realty Trust, REIT, WP Carey, a REIT, Essex Property Trust, a REIT. Oh, I see 4. Realty Income, and it's another REIT. Main Street is a BDC. So we have 4 real estate investment trusts up near the top that are all in gains, and a BDC that's kind of, business related, real estate-ish related. A lot of consumer defensive up here towards the top. We have Colgate, Johnson & Johnson. Interesting to see JP Morgan kind of bouncing back here as well. Cisco Systems, interesting to kind of see that one kind of moving a little bit positive. Hormel Foods, that's also consumer defensive. And then what are our biggest losers, right? Not a lot. We actually didn't lose that much. We have more green versus red, but we had some very strong red. We had Pfizer down 9.39%. This is one I think I talked about a bit ago, kind of taking a little bit of profits on either Pfizer and Lockheed Martin, where another one I want to take a little bit of profits, kind of shave off some profits. I never did shave off profits, but it's probably a good idea maybe to kind of shave off a little profits, maybe kind of toss that at something that might be, Starbucks, which is down 18%, potentially Clorox, which is down a little bit, but kind of moving more defensive in this position. So I could definitely look at potentially readjusting my portfolio, making allocation differences to kind of make it a little bit more defensive as we kind of go into a different time style. This isn't where it's a growth market now. It's more focused on kind of being defensive, not losing so much of your equity while continuing to invest, because you never know where the bottom's at, right? If you pull your market out, you never know where the bottom's at. You're going to eventually miss out on the bottom. You're going to miss out on those dividends, reinvesting into more shares. And once the market does rebound, it rebounds quickly. It burns off very slowly, little percentages differences at a time, but when it bounces back, you miss out on those days of 1, 2, 4% differences at a time, and those can make a huge difference. When you're gaining, it's completely different than when you're losing. When you're losing 50%, it takes 100% bounce back to make it back, but that's why it recovers so much faster. So yeah, you don't want to miss out on those days, because you're going to end up for a world of hurt. So yeah, that's our 1 week right there. Jumping over into number 3, the activity. What activity did we have? Well, last week we had those massive $67 of dividends. This week we had absolutely no sells, no dividends. Oh, we did have a dividend. We had Cisco right there, pay out $10.30. So that's quick and easy. We also had a buy. We bought Starbucks last week, so we can actually update our dividend tracker here in number 4. So we made one buy of Starbucks, and we had one dividend of $10.30, and we made our deposit there every Friday, regardless of what the market does. We deposit $127.66, and then we take $127.66 and $10.30. That's $130.96. Yeah, $130.96, right? Oh wow, what the heck? I'm off of my math, or we have some extra cash in there somewhere. It may have been from realty income. But we have $144.74 to invest this week, which is awesome here on Monday. And now we can move into number 4. Let's go ahead and update our dividend income. So again, we only purchased one company last week. And if you guys are brand new to using this tracker, it's called trackyourdividends.com. It is a completely free website where you guys can go in here, sign up completely free. You can add your holdings. You can even import it right here via a Excel document, a CSV. You can import it in there just by using your shares. It asks for the ticker, shares, and average cost. And then boom, it kind of imports it in automatically for you. So here we can see that our current portfolio income is sitting here at $1,068 of dividend income with a yield of 2.71. Now, if we go ahead and update SBucks, which is Starbucks right here, we own... Let's see, I'm just going to go ahead and copy that, paste that. We own, let's see, where is it? The shares. 17.85 shares is what we used to own. If we head into our holdings here and look up SBucks, we can see here that we own now 20.23001. So I can go over here, hit the update. And again, right now, Starbucks was paying us $34.99 at a yield of 2.22%. That was our yield. So now we own 20.23001, and our cost basis went from $88.23 to now $87.18. $87.18. We basically reduced our cost per share by roughly $1 almost, right? So now if I take a look at this, our income, our dividend income for the year went from $34.99 to now $39.65. So right there alone, that's nearly $5. We just increased our annual income by $5 by investing a little bit over $100, right? We invested less than $200, but we increased our future just income potential by $5. And then our yield went from 2.22 to now 2.25. Up at the top, our annual income went from 1,168 to 1,173. That is a $5 difference in our annual income, so that's about right. Our yield stayed the same at 2.71. Okay, so that is pretty good. We upgraded our dividend tracker here. Now, I am going to stick with what I'm buying down right now, and buying down is going to be Clorox and Starbucks. So I'm going to go ahead and split my 144 here by 2, and I'm just going to be putting 72.37 between Clorox here and Starbucks. I already own it. I don't have to research it. I've already done my research on it. It's negative in the portfolio. That just kind of means I can average into it. I already kind of decided to buy it. Starbucks isn't going anywhere. Clorox isn't going anywhere. These are just solid companies, brand names. And they're going through a little bit of, beat down times right now, but they're definitely will recover in the future, just with time. So I think that's it. We have buying power set at 0 because now we have that capital going in on Monday. And I think we're good to go. So that is going to be it for this video. Let me know down in the comment section below. What are you guys buying out there? Were you green this past week? Were you red? Are you continuing to buying into the market overall? Are you buying an ETF that tracks the S&P 500? Or are you buying individual companies? Lots of questions, right? But I appreciate if you guys do answer me down in the comment section below. Appreciate you guys hanging out with me to the very end. Drop a smiley face emoji if you guys hung out to the end. Okay, that is it for me. Have a great day. Bye bye.